In this presentation, we will continue on with our sole proprietorship comprehensive problem recording the transaction on January 10th, where we have received payment for a client for work to be completed in the future. For more accounting information and accounting courses, visit our website at accountinginstruction.info. So this is often one of the types of transactions that are a bit more confusing. We'll go through this first by just taking a look at our questions, our normal questions, and see what we can build as we build it, and then we'll discuss what we're doing here. So first question, is cash affected? And that is yes, because it says received payment. So if I don't know anything else that happened, I don't know why we received payment or what's going on. I know that payment typically means we got money. So we can say, okay, cash is going up. I know that cash is a debit balance. We're going to make it go up by doing the same thing to it, which is another debit. So we're going to right click and copy the cash. We're going to scroll back down. We're going to put that up here on top in cell C18. Right click and paste 1, 2, 3. The amount that we got, we received payment for. The amount will be for the 3,000. 3,000. And then we're going to credit something for 3,000. There's only 2 accounts affected with most of these transactions. I'm going to do this with a little formula of negative of that number. Now we just need to know what this account is. Now, why would people pay us 3,000? Well, typically it's customers paying us 3,000, and typically it's because we did work. Now that's the case, and you would think that would lead us to revenue. But really the question is, when did we do the work? Did we do it in the past? Did we do it now at the same point in time we got the money? Or did we do it, are we going to do it sometime in the future? And that's the question we need to ask, because we can't recognize revenue. We need to recognize revenue, in other words, when we do the work. And it's possible for us to receive payment either before work is done, after work is done, or at the same time. So what happened here? We received payment from a client for work to be completed in the future. So that means we got the money before we did work. And this is often the most confusing type of thing, because it doesn't happen for every type of industry. Most industries, we don't get money before we do work. We get money at the same time we do work, or we get money after we do the work and have billed the client. So this one's the most unusual. Typically, if we're dealing with money received, typically we did the work at the same time and we would record revenue at that point, or we did the work in the past and have the receivable that we're going to reduce with that credit. In this case, we got the money before we did the work. And when would that happen? If we're like a newspaper company that we have a subscription-based, anything with a subscription-based, or if we have like a concert that we're selling tickets to a concert, and again, this doesn't happen in most industries, but it's becoming more common as we have subscription-based like software applications and whatnot, where people are going to get, pay for a year's worth of application, and then the company is going to provide the service in the future. So when we get the money, then we debit cash, but we can't credit revenue. We haven't earned it yet. We haven't provided the service. So we have to credit instead what's called unearned fees or unearned revenue. And that unearned revenue, unearned income, whatever our income source is. And that's going to be a liability account. So it's a liability. It has a credit balance. We're going to make it go up by doing the same thing to it, another credit. The reason it's a liability and similar to accounts payable is not that we owe money in the future. We're not paying money in the future necessarily. We owe our service. We owe work. We owe our time. And that's what we're going to give in the future. If we don't give that, then we probably should give back the money and owe it in the future. Okay, so we're going to right click and copy unearned fees. We're going to put that down here in cell C19 by right clicking and pasting 1, 2, 3. I'm going to indent this, probably done for you already, by going to the Home tab, Alignment Group, and increasing the indentation. We have now journalized or journalized the journal entry in this blue area, the general journal, which we will now post to the general ledger. You could do this a few different ways. You can make the screen really small. I'm not going to do it this way, but if you wanted to go down here and make the screen really small so you can see this area and this area, note that if you see hashtags when you do this, just make the cell a little wider, and you should be okay. We are going to keep our screen at 130, or I am, and we're going to use the frozen panes to do that. I'm going to go to the right just a little bit. I'm going to free so that B is flush, column B is flush with the side here. We're going to put our cursor in K1. Then we're going to go to the View tab up top. We're going to go to the Windows group. We're going to go to the Freeze panes and freeze those panes. Make sure your cursor is here when you do that. And then we're going to go to the right. If I just scroll to the right, we can see these panes have been frozen, or in other words, are not moving when we go to the right. So B through E are still there. Okay, with the frozen panes, we're going to post this to the general ledger. First, starting with cash. Here's cash in our general journal in our journal entry in the general journal, and here's cash on the trial balance. Here's cash at the GL. So I'm going to go to the right just so it's side by side. There's the cash we want in cell O11. Scroll down just a bit so we can see everything at the same time. Within cell O11, we're going to say equals and point to that 3,000, bringing this 40,000 balance up by 3,000 to 43,000. That 43,000 then is also going to be found on the trial balance. If we go just to the left, click right with the cursor, there's the 43,000. So it's making our trial balance here. Of course, we're out of balance by that 3,000 now until we record the other side of unearned fees, unearned revenue, unearned income, whatever we want to call it. So here it is. We're going to go to unearned fees. That's going to be our last liability account on the trial balance. Therefore, the last liability account as well on the GL. Going to the right, we're looking for that unearned fees, unearned revenue. There it is. I see it. I'm going to bring it over as far as possible so we have side-by-side representation. Here's the unearned fees, unearned revenue. We want to be on the credit side. So we're on the credit side, and we're here in the blue area in cell AB16. Going to do this with a formula by saying equals and point to that 3,000, bringing the zero balance up by 3,000 to 3,000. So then that 3,000 we're going to bring back and just take a look at it on the trial balance. It should be created automatically. If we go just to the left of the frozen panes and then click right with our arrows, we'll pop back over. There's our 3,000 increasing in the liability. So what has happened here? We're back in balance, by the way. What has happened? We got cash. Cash went up. Assets went up. We didn't increase equity, however, because we haven't earned it. What increased instead? The liability. Who has claim to that cash that we got? The customer, in this case, has claim until we do the work, until we fulfill the contractual agreement, at which time we will recognize the revenue as revenue. And how will we do that? We'll do that in the adjusting process. We're going to go through the adjusting process. We're going to determine how much of this has been earned and go here. So in other words, if you're in an industry like a magazine or like we have concerts or something, we're going to tell our accounting department every time you get money, debit cash, credit unearned fees. And then at the end of each month or periodically, we will determine of those fees how much has been earned, how many magazines have we delivered and whatnot. And then we will make an adjustment at that time on a periodic basis, reducing unearned fees and recording the related revenue for it being earned when we earned it in accordance with the revenue recognition accrual principle. For more accounting information and accounting courses, visit our website at accountinginstruction.info.